Hey guys, today we're going to discuss banks and money creation and how actually banks are creating money out of nothing. We're going to talk about why we need cryptocurrencies and decentralized finance. On the picture here you're seeing one very smart guy, Richard Werner. He's a professor born in Germany in 1967. He holds a first-class honors Bachelor Science in Economics from the London School of Economics and a doctorate in Economics from the University of Oxford. He has also studied at the University of Tokyo. He's a really brilliant guy, and now we're going to listen to him, and in the next video he talks about banks and money creation and some other things. Let's listen.
Banking actually has not been very well understood. There have been three theories of banking, and they've existed and coexisted for at least the past century. The most dominant one currently is still the financial intermediation theory of banking. And nobody had ever done an empirical test. So I thought, well, since these theories are mutually contradicting, when it comes to the crucial question of where does the money come from when you get a loan from the bank? Well, let's figure it out. Let's do an empirical test. So I did this and published 2014 and 2016 two papers. The conclusion is the financial intermediation theory was rejected. Banks are not financial intermediaries. You may have heard of the fractional reserve theory, slightly older. That one was also rejected. It says that banks lend money out of reserves, and they don't. Financial intermediation theory says they lend out of other people's deposits, and they don't. So the oldest theory was the one that was found to be correct, and that's the credit creation theory, which was known 100 years ago, which is why one of the papers is called Lost Century in Economics. Banks create money out of nothing through the process of credit creation. Economists always say banks are deposit-taking institutions that lend money. Banks don't take deposits and they don't lend money. They don't take deposits because they borrow from the public. A deposit suggests something held in custody, a bailment, and this is not what happens. Instead, the money that you lend to the bank, which they call erroneously a deposit, is actually their money. They own it. It's just a loan. You're a general creditor. And banks never lend money because, and that's unlike firms and non-bank financial institutions, they are in the business of purchasing securities. When you get a loan, the loan contract is a promissory note, just like the Bank of England promissory note, of course, not legal tender, as you may have noticed, but the bank will purchase that security from you. That's what it does. And now it owes you money, and it creates a record of the money it owes, which we call deposits. And that's how the money supply comes about. So you get a loan, £1,000, let's say. The loan contract is purchased by the bank. It increases the bank's assets, and the bank then records the money it owes you, which it calls, slightly incorrectly, a customer deposit, because no customer has deposited this, and in fact nobody has deposited this anywhere. It's not transferred from anywhere inside or outside the bank. It's created out of nothing. These fictitious deposits are our money supply. So banks are special. They create the money supply, 97% in most countries of the money supply out of nothing through the process of what's called credit creation. And that's the problem of centralized decision-making. The central planners like an easy life, and they think that's good for them. It's not good for the economy. Another piece of evidence on centralized decision-making is the ECB in the 2000s. So credit creation in Spain, Ireland, Portugal, and Greece was expanding by 30–40% under the watch and auspices and supervision of the ECB. As I had warned, the ECB was going to do this, create asset bubbles, banking crises, and recessions in the Eurozone. And of course, that's what it did. So again, the problem of centralization in the hands of these central planners. Another example, Japan in the 80s. They used the window guidance, credit guidance tool until the 80s for good purposes, but then the central planners, because they're unaccountable and too independent, decided, oh, let's create a bubble. And they announced their window guidance loan growth targets. And I pressed the button, you see the actual result 3 months later. Banks had to follow, and they had to increase their lending for real estate speculation. And that's how the Japanese bubble was created by the Bank of Japan. So centralized decision-making has failed. How have the central bankers, this is my last slide because my 12 minutes are just up, have reacted to the truth coming out? They admit that they've been telling porkies, and now they propose to increase their power. So central bankers belatedly admit, oh, now that you've mentioned it, yes, banks create the money supply. So let's abolish that now. And also, by the way, let's abolish cash. So what should we do? Well, introduce digital cyber currency that central banks issue and control, and thereby gain total control over all economic transactions, decisions, and the whole lot you've just heard from the CEO of the GDI. So the greatest concentration of central banking power in history is really the bid they're aiming at. That's the central bank's goal. And of course, digital accounts of dissenters and regime critics could be switched off. It'd be very difficult to even purchase necessities. So this is an Orwellian dystopia of total control, the end of any freedoms. That's really what central banks are aiming at. Several central banks have, like the Bank of England, already prepared their microchip implant, RFID chip, to be implanted under your skin. And why is the sudden discussion about universal basic income from all the grassroots and inverted commas movements and billionaires? Oh, universal basic income is the bribe for you to accept the microchip. The overarching trend of the 20th century is concentration of power in the hands of the few. That's what we have to keep in mind. We have to work against this. We don't want to have these unaccountable central planners making decisions. We need decentralization, and the solution therefore is to maintain public money in the hands of local community banks, decentralize decision-making, give local people the power in the form of local public banks and local not-for-profit community banks. As I walked in, I was delighted to see that the Gottlieb Duttweiler Institute is also about Genossenschaft and cooperatives. And of course, the majority of banks in Germany are cooperative banks. And that's really what we need. So we shouldn't really abolish banks. We just have to get rid of the too big to fail banks, introduce a few rules that you create credit for productive purposes, and then we can solve many of the world's problems. And these are really the promises of economics, that we can solve a lot of mankind's problems. As JFK said, our problems are man-made, therefore they may be solved by man, and man can be as big as he wants. Of course, he was referring to ladies as well, no doubt. No problem with human destiny is beyond human beings. JFK, thanks very much.
I think it's obvious that centralization is the root of all evil. Central banks want more control, governments want more control, and the ordinary people are the ones stripped of their rights. Blockchain technology, if used in the right way, can free the people of the shackles of the current financial system. We are buried under a lot of bad debt, and Professor Warner talks about using credit money creation in a good way, but this can only happen if the centralized bodies are taking the right decisions, which they are not doing. And we need decentralization. We need it badly. We need blockchain technology to be used to eliminate corruption. We need to use it to change the way important decisions are made. Cryptocurrencies are going to be a vital part of the new economy, and I don't think that banks can do a lot to stop it. But central banks can for sure keep control over fiat currencies and improve them by making them digital and interoperable. Governments can enforce the will of the few over the many, but if one big country uses the power of cryptocurrencies, then the other countries will have no choice other than start using them also. Why? Well, because cryptocurrencies and decentralized finance can give any country a big advantage. We see that more and more crypto projects are starting to change in order to enter the world of decentralized finance. We're seeing Flare network, which is going to bring smart contracts on the XRP ledger, Cosmos, Polkadot, Cardano. They're all going to be interoperable, and they're going to build more and more DeFi projects. They're going to interoperate with Ethereum. We're seeing many advancements happening on Ethereum, and of course we are waiting on Ethereum 2.0, and many people are hoping that it is going to bring scalability to the Ethereum network. And you know that many great DeFi projects are being built on the Ethereum network. Central banks can't control everything, but they can direct the change that technology brings, and the regulators are the ones that can actually shape the future of the world economic system by using regulations, of course. And they can't stop the revolutionary innovations created by the blockchain companies, but they can choose in which direction the space is going to go. Okay guys, that was all for today. I hope that you enjoyed the video. Please like and subscribe and hit the bell button. See you next time.